These automakers do stand to lose a lot. A really healthy chunk of sales, particularly for GM. Tesla might be a little bit more insulated, with a less elastic base of buyers, but still they can count on a significant drop in sales because of this. Limiting the EV tax credit is a dilemma for automakers, and GM's CEO Mary Barra has suggested House Speaker Nancy Pelosi lift the cap to create a level playing field, but it doesn't seem to be possible. So what's the current situation with the tax credit removal issue? Let's find out in today's episode of Tesla Fans. Welcome back to the channel. The letter states GM and Tesla, with the latter being the leader in EVs, are the only companies that have exceeded the limit so far, but other automakers are also expected to near the 200,000 mark as they release an array of new electric products. The thing is, getting a 7,500 tax credit isn't always the same thing as buying a car for 7,500 less than its sticker price. The tax credit came to life with the 2008 Energy Improvement and Extension Act as a tool to narrow the price gap between. If you're here for up-to-date information about Tesla, Elon Musk, and the most advanced technologies, then you're at the right place. If you're new, why don't you subscribe to the channel and ring that bell so you won't miss out on the next episode of Tesla Fans. Now let's get back to today's content. The CEOs of GM, Ford Motor, Stellantis, the expensive EVs at the time, and gas-powered cars which were cheaper, claiming a credit depends on having a tax bill in the first place. To owe at least $7,500 in federal tax, you must make more than $52,000 a year. If you have other deductions to offset against your taxes like a mortgage, student loan payments, or childcare costs, you must earn even more. This is a huge disadvantage for electric car manufacturers. For years, GM CEO Mary Barra and other executives, which is the parent company of Chrysler and Toyota Motor North America, are urging Congress to lift the federal government's cap on the number of vehicles that are eligible for a tax credit of up to $7,500, which is a move they say will encourage consumer adoption of the cars and trucks. In a joint letter sent Monday to congressional leaders, the executives say the credit, which begins phasing out once a company sells 200,000 plug-in electric vehicles, is essentially to keep the vehicles affordable as production and commodity costs rise. Eliminating the cap will incentivize consumer adoption of future electrified options, with the Detroit automaker have urged that the cap be lifted to create a leveled playing field. They say the current policy penalizes early adopters of the technologies. The aforementioned letter to Congress was addressed to Senate Majority Leader Chuck Schumer, Senate Minority Leader Mitch McConnell, House Minority Leader Kevin McCarthy, and Speaker of the House Nancy Pelosi. It was signed by Barra, Ford CEO Jim Farley, Stellantis CEO Carlos Tavares, and Toyota North America CEO Tetsuya Ogawa. The coming years are critical to the growth of the electric vehicle market, and as China and the EU continue to invest heavily in electrification, our domestic policies must work to solidify our global leadership in the automotive industry, the letter states. The letter also notes that the four companies have pledged to invest more than $170 billion through 2030 to bolster EV development, production, and sales, including near-term investments of more than $20 billion in the United States. So how is GM going to deal with the government's EV credit tax cap? The U.S. government should extend new investment tax credits for EV manufacturing and supply chains and expand consumer incentives to electric vehicle purchases, including for used vehicles, said General Motors President Mark Roos. Back in January, GM said it was setting a dramatic goal to sell all its new cars, SUVs, and light pickup trucks with zero tailpipe emissions by 2035. Which is a dramatic shift by the largest U.S. automaker away from gasoline and diesel engines. 2021 is the tipping point toward EVs, Roos said. He also called again for the 500 EV tax credit to be extended to more vehicles. GM had reached the 200,000 EV vehicle sale threshold in late 2018, and the credit fully expired for all GM buyers in April of 2020. GM sold 2.55 million vehicles in the United States last year, but only about 20,000 were EVs, including the Chevy Bolt hatchback. It's cutting the price of all its vehicles by $2,000, which doesn't quite cover the shortfall, but for some buyers it could work out better than the full credit, particularly if it ever delivers on its promise of a much cheaper Model 3. If you look at behavioral economics, a $2,000 instantaneous price reduction rather than a tax credit redeemable a year in the future does have some benefits for some people, says Mike Ramsey, an automotive analyst at the research firm Gardner. Most of those 200,000 Teslas were luxury Model S sedans and Model Model X SUVs whose buyers were likely high earners, but Tesla is pushing down market with the Model 3. It said in November it was investing $27 billion in electric and autonomous vehicles over the next 5 years, up from $20 billion planned before the coronavirus pandemic. We definitely bet the future on battery electric vehicles, not plug-in hybrid electric vehicles. Ruse said, "We're going all the way, we're going as fast as we can, that's the best we have." But how does this tax cap affect Tesla's business? Musk's company just became the first automaker to lose access to the full $7,500 federal tax credit designed to spur the adoption of electric cars. As of January 1, its customers qualify for only a $3,750 credit. Over the next year the credit will disappear entirely. In response, Tesla announced, Musk has promised a 35,000 version of the car sometime soon. It's reasonable to expect people with smaller paychecks to want one, people for whom an upfront $2,000 price cut might just work out better financially than the full tax credit, and for whom it might make a bigger psychological difference, as well as reducing monthly payments on a loan. In general, the limitation of electric vehicle tax credit causes a lot of disadvantages for Tesla in particular and electric car manufacturers in general. To date, urging Congress to raise the limit has not been approved, and automakers are still doing their best to benefit their customers. We just hope that the problem alleviates itself soon. What do you think about this tax? Let us know in the comments section down below. And with that, today's episode has come to its end. If you have any interesting topics you would like us to dive deeper in, please let us know in the comments section down below. And if you enjoyed today's episode as much as I did, please leave a like, share the video, subscribe to the channel, and ring that bell so you won't miss out on the next